Kim, good to see you. Today we get to talk about phantom income and its scary tax implications. Few things sound scarier than phantom income. You would think any kind of income would be good, but this one and the taxes that come with it can take a lot of investors by surprise. So, what is phantom income?
Yes. So phantom income is money that you're being taxed on, but never shows up in your bank account. So for the folks that have brokerage accounts that are non-retirement accounts, we have to understand that investments oftentimes spit out interests and dividends and capital gains. If that's in a brokerage account, that can be causing taxable events for you without you ever seeing the income itself, because that money often gets reinvested.
So, just to say it again, you're on the hook to pay taxes on money you haven't actually received.
Yes.
That is scary. I agree. Okay, so how will I know I'm paying this tax? Am I looking for it on my tax return?
Yeah, so that's the best place to look at it, your tax return, those 1099s from those brokerage accounts. But yeah, if you look at the front page of that 1040, there's spots on there for interest, dividends, capital gains. You're going to see that show up on there.
Okay. Now, I know you focus on strategic tax planning. So, how do we avoid phantom income?
So the best thing to do is make sure that you're aware of what you're owning and what buckets of money. So for example, there's some mutual funds out there that are not very tax efficient at all, that kick out large capital gains every year. So again, if they're doing that in a brokerage account, that's going to cause you to pay taxes on that money, even though that's getting reinvested in that mutual fund. So if you have those types of mutual funds, you want those within the IRAs or Roth IRAs. That's not going to be taxed until you take that money out of an IRA, or never taxed again in a Roth IRA. So in those brokerage accounts, you want to make sure that you're using more tax efficient vehicles. Oftentimes, ETFs that don't spit off those capital gains, dividends, things like that.
Interesting. Again, I'm glad we got to talk this through, because I've heard that before, but clearly there's a lot of thought that needs to go into where we put our money to be most tax efficient. So Kim, if somebody wants to talk about this with you, how can they get a hold of you?
The best thing to do is go to our website. You're going to see all of our information there. It's www.young-wm.com, and we'd be happy to have a chat.
Great. Kim, thank you.
Thanks, Erin.